I won't stop till I hear him say,
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, this is going to be a Zoom call of an XRP trade breakdown that I had shared with you all on Twitter, giving you guys a little pop-up Zoom. I like to do these, show face, let you guys know what it is that I'm doing in the market via XRP intraday trades. So here is a complete trade analysis from the 5-minute time frame down to the 1-minute time frame of my trade entry confluences, some things that I was looking at in the market, which allowed me to have and build the confidence to take and place this trade during New York session via trading XRP. Hope that you guys enjoyed the video breakdown. If you do like breakdowns like this, make sure that you smash that thumbs up button. Please subscribe to the YouTube channel. We are going to be doing a 100 XRP giveaway once we reach 10,000 YouTube subs. Guys and gals, like I mentioned from the beginning of this YouTube channel, we are going to reach that number. We are going to do nothing but persevere and prevail in these markets. I do appreciate you all for returning back to the YouTube channel. Without further ado, let's jump into today's video breakdown. So with that being said, thank you guys for tuning in. I'm going to go over an XRP trade analysis that I took a scalp position this morning. I told you guys, I'd mentioned to everybody on Twitter as well as in the CYPRX group chat that I'm only going to be personally looking for intraday trading positions on XRP. I'm not going to be looking to add to any of my long-term holdings on XRP. This is my current crypto portfolio that I'm day trading with. It's roughly around $20,700. Very transparent with you guys. I'm not a multi-millionaire yet. I'm a six-figure trader. I manage 3 different portfolios: my Osprey FX account, my forex fund account. I don't classify the little tiny minuscule forex portfolio that I'm growing right now a big account yet, because it's only sitting at roughly around $5,000. And then I have my intraday trading crypto portfolio, which you guys can see here is roughly sitting at around 20,700. So with that being said, I'm going to break down a trade entry today on XRP, kind of just being very transparent with you guys. This was a very easy, clean scalp surrounding CYPRX confluences. We're going to go back to yesterday's price action. I'm going to discuss every single thing that I was seeing on the 5-minute time frame and the 1-minute time frame that gave me the confluences to take this trade. We're going to be looking at institutionalized liquidity, what the banking institutions were doing, how they were setting up traps for retail, trading against retail methodologies. You guys have to understand that even if we're looking for little tiny intraday trading scalps, that retail methodologies 9 times out of 10 are going to get tapped out of the market. So if you're trading against those methodologies, i.e. you're looking for double bottoms, you're looking for double tops, you're looking for trendline liquidity as your target areas, and you're attempting to move with the institutionalized order flow. So hopefully this Zoom call allows you to, be able to identify that, or gives you kind of an in-depth perspective on how I identify that. Nothing that I constitute here is financial advice. Understand that our goal as traders, regardless if you trade, order blocks, Wyckoff, support resistance methodologies, maybe you're a trend line trader, who knows? Our goal as traders, no matter what strategy you trade, is to create a well-defined edge in the market. Here at CYPRX, we have a certain set of confluences that we like to live by before we look to pull the trigger on any given trade. And the majority of us here at CYPRX are extremely disciplined, and we do not pull the trigger until we see these well-defined confluences. So if you're not in the CYPRX community, then thank you again for joining. We're a community of individuals who are extremely prevalent on becoming successful in the forex market. I'm sure the majority of us here, along with some crypto hodlers, are crypto day traders as well. So hopefully this trade breakdown helps you guys out. Okay, can you guys see my screen? Okay, you guys can see my trading view. Emiliano, after the Zoom call, bro, I'm gonna have a one-on-one with you. Okay, bet. All right, cool. So let's get rid of that. So we're going to start on the 5-minute time frame. We're going to go to yesterday's price action. Again, when I'm analyzing price, I like to look at the past at least 2 days worth of price action. Sometimes I only go back 1 day, but the majority of the time I go back at least 2 days to get myself well-defined areas of interest to establish a higher time frame analysis. Okay, I do my higher time frame on the 30 and the 15-minute. Now, for the sake of the time of this Zoom call, and as well as kind of, not giving everything that we give to the CYPRX students, I'm not going to do the higher time frame analysis or talk about higher time frame areas of interest or identification. What we're going to do is we're going to start on the 5-minute time frame. So yesterday's price action, we're looking from Asia session to Asia session. We know that the cryptocurrency markets do not close. However, a new daily candlestick is created and new areas of liquidity are created each and every single day. So the first well-defined area of interest that we need to be breaking down to see what the banking institutions did are from Asia session to Asia session. We know that in these two general vicinities, right before Asia session manipulation window starts, that this is where the FX market reset themselves. So same thing with the cryptocurrency markets. This is where the cryptocurrency markets would reset themselves. And this is where the new daily candlestick starts. So we're looking from this area of interest to this area of interest on what this current price action did from A to B to give us kind of a bias on what the market's going to do the next day. Again, nobody can predict the future. As an intraday trader or a scalper on XRP, we're just looking to give ourselves a well-defined edge to get in and out of the market as fast and as fluently as possible. So with that being said, let's talk about this Asia session manipulation window, okay? We can see a reoccurring theme during each and every single session, Asia, London, and New York. And that theme is they manipulated early buyers during their manipulation window. They dropped price and they took buy positions. Okay, you guys can see here, Asia session, what did they do? They built liquidity beneath lows. They attacked those lows, and then right before they passed price action over to London, they took buys. So I have marked down here for you guys, Asia session buys price action. We see a reoccurring theme coming into London, right? So London session, what did they do? They manipulate liquidity, okay, above highs, dropping price down at a discount for themselves. And then right before they pass price action over to New York, they take buy positions from lows. Again, i.e. discounted prices, the banking institutions are going to attempt to push prices as low as they can during their session in their window of time to take discount buys if they're going to do so. One thing that I noticed about this London session is that it got past price action at a high. We can identify that because why? Where from Asia session bought from, okay, we have an A to B move. London session got past price action at a high. So if you were looking to trade this London session, you would have sat and waited on your hands because you know that London session is not going to buy from a high area. Again, i.e. following the, the most general saying in the market, buy low, sell high, right? If you don't follow those instructions, most likely you're going to get tapped out of the market, or you're the type of person who just buys whenever you feel it's necessary. You don't have kind of like a structure on where you're actually buying in at price, okay? Now, even if you're a hodler in the market, you can utilize these methodologies to situate yourself to build a crypto portfolio, just for the record, okay? But so same thing here, we see New York session, reoccurring theme. So we have Asia session, drop price, bought from lows. London session, drop price, bought from lows. Now look at this New York session. We have the same thing, manipulation window. They manipulated sellers, they manipulated buyers, they dropped price into discount for themselves, and they took buy positions. Now the most interesting thing about these New York session buys is this was when the daily candlestick started to form its body, okay? So what do we see here? Before price got passed over to this daily reset, what did they do? They pushed price all the way up to come and attack trend line liquidity above highs, okay? And I told you guys, if you're looking to buy in the market or sell in the market, you need to have well-established areas of interest in the form of trend line manipulation, double bottoms, double tops, order blocks, okay? All of these retail methodologies, the banking institutions trade against that. I like to teach the CYPRX students that the third touch of a trend line is the most predominant area. And if you see that 9 times out of 10, the banking institutions are going to come to attack that. Well, here you can see a perfect example of that. We see a touch of a trend line 1 during Asia session, touch of a trend line 2 during London session, and a touch of a trend line 3 during New York session. And before the daily candlestick reset itself for the next day, boom, the banking institutions came to attack all of the liquidity from the retail traders that were selling this price action in the form of trend lines, okay? So I was able to identify that. Now, with that being said, coming into the new day's worth of price action, we have to understand that we've established a low here. So I kind of drew this, this little rounded bottom off for you guys, okay? Why? Because as long as we hold above the previous day's low, we have to assume that the market makers are going to continue to drive price higher. Why? Because the previous day, we see that they continuously push price down into discount and took buys. Same thing during every single session. So with that being said, if this is a daily candlestick low, and this is going to be the daily candlestick high somewhere over in this general vicinity where Asia session opened, okay, from this high right here to this low right here, we have to assume that as long as the market makers are pushing price above this high, we are going to respect bullish order flow. With that being said, coming into this new day's worth of price action, okay, we have now another Asia session. This trade took place during New York session. So again, this is just how I do my analysis coming into every single New York session. If you want to take notes on how I do that, again, get a pen and paper out and just start to say, okay, look, hey, Cypress identifies what the previous sessions did, how he did it, right? And things of that nature, okay? So again, we're talking about the daily candlestick open. That's right here in this general vicinity. I'm not going to give you guys specific times because again, that's specifically for the CYPRX students where I give them well-defined times and structures in the markets where we can actually look at what time banking institutions are doing these things at. But we see here during the daily candlestick open. So this is again where the FX markets would reset themselves. What did the banking institutions during Asia session do? They created an area of liquidity, making a run on lows and made new highs. So we have to understand the market is doing what? We are creating higher highs, higher lows, higher highs, higher lows in the market. The market makers have no interest in grabbing liquidity from the daily lows. We are creating intraday lows or intermediary areas of liquidity or internal liquidity, grabbing those lows and targeting external liquidity in the form of retail trading positions. Okay, so that's the occurring theme. So with that being said, I have this arrow marked off because I identified that this was a low that led to a market break in structure. So we have a previous market structure high. This low led to a new market structure A to B move. So with that being said, this area of interest is significant. Why? Because we have to understand that the market is bullish until this level is broken bearish, which would mean what? We have to assume that the market is going to continue with the trend up until it shows us a willingness to attack the last area of interest that led to a market break in structure, right? That's just logic in the market. We would only sell this price action if we broke this area, retested it, or created a lower high underneath of it. And then in this area over to the right-hand side, we would look for sell positions somewhere well-defined with CYPRX confluences, okay? But we failed to get that, right? So with that being said, we have to assume again that the banking institutions are doing what? They're building internal liquidity pockets. They're making a run on that liquidity, and they're taking more buy positions. Okay, so Asia session, this whole entire session was doing what? They were buying XRP. Okay, we see them do it twice. We see them push price down into discount for themselves right when the daily candlestick opens and starts to form. They give themselves discount, they take buys. Same thing, they're about to run out of time. They have to pass price action over to London. So what do? They push price down, manipulating retail sellers who like to sell trend lines above these highs. You guys can see that internal Asia session trend line liquidity right there. They push price down into a discount. They fail to break the low from the daily candlestick open that grabbed liquidity and made a new session high. They created a higher low and bought from a discount one more time, buying XRP, and then they pass price action over to London. Okay, if you guys are following along with me, again, this is how I get my well-defined entries coming into New York session. So we see a reoccurring theme. Yesterday's Asia session bought. Today's Asia session bought. So now we have 2 days worth of price action where the banking institutions are buying. We also have two well-established areas that we would need to break bearish before we can say, okay, XRP price is bearish, okay? Temporarily, as of right now, with the price action that is being displayed to us, we have to assume that the markets are going to continue to drive price higher until we see what? Until we break these well-defined areas of interest where the banking institutions are taking discounted buys from. So with that being said, coming into this London session, now let's talk about what London session did, okay? London session, same thing. We see the market makers do what? During the manipulation window, again, I'm not going to give you guys those defined areas of interest, but if we just generally mark off that manipulation window during London session, okay, we see that the market makers built liquidity in the form of a what? A double top formation. Here's a double top right here. We see a high, we see a high. If we were looking at price action in the moment, okay, we would understand that retail traders are most likely taking shorts from these highs, okay? They're taking short positions from these highs, trading some type of double top formation methodology or retail resistance methodology, okay? We already understand that the institutionalized order flow is doing what? Remember this pattern in the market where the market makes an area of liquidity, makes a run on that liquidity, and makes new session highs. The pattern looks like this: a low, a run on those lows, and a new market structure high that breaks structure. This is an institutionalized pattern that only institutionalized traders can create. Why? Because retail traders don't have enough money to manipulate the market this way. So when we see this happening, we have to understand that the order flow is to the upside, and that any sell pressure, most likely in the form of retail methodologies, is a manipulation move for the bank and institutions to build themselves liquidity in the market so that way they can drive price higher. Okay, so with that being said, this London session, we can see what happened. We'll get rid of all this. The bank and institutions drop price to the downside, again, taking a buy position from where Asia session bought price action from. If we look at where London session bought price from, again, paying attention to the methodologies that I like to teach you guys on YouTube, if you're here from Twitter, okay, we see a higher low that was created right here during Asia session after the sweep of liquidity. So right here, we see that daily candlestick area of liquidity. The market swept liquidity. This is the most well-defined area of interest, the higher low after the grab of liquidity. And we see that London session manipulated price into a discount from where Asia session bought from, and they bought price, okay? Liquidating all of the retail traders above the double top formation before they took profit, okay? So we have all of this well-established information before we come into this New York session. So with that being said, we have now 3 areas of interest that we could seek to buy from during this New York session, where at any given point in time, these 3 areas of interest we understand were manipulated for the bank and institutions during Asia to take buys, during London to take buys. With that being said, until we break these levels with bearish order flow, creating lower lows and lower highs beneath them, we have to understand that these are going to be sensitive areas where if we understand that the bank and institutions during New York are only going to take discounted buy positions from previous areas of interest where other bank and institutions bought from, that at any given moment in time, if price drops into these levels, we could see a bullish reaction. So these are 3 areas of interest that I define prior to my New York session trading day where I could look to take buy positions from. Okay, so that's how I get my areas of interest, my top-down analysis. Again, this is just my 5-minute analysis. Okay, so with that being said, highlighting from the candlestick bodies down to the wick, okay, we see that this was the last A to B move that was created during London session that broke a previous market structure high. So this is the first immediate area of interest where if the banks during New York session push price down into, they're going to seek to take discount buys from what? From where London session bought from, okay? Another thing that I noticed on the 5-minute time frame, if we retrace price action or we reverse it a little bit, what do you guys notice? What do you guys notice about how price action was passed during New York? It was passed at a high. You guys can see that right here. This is a high. As soon as New York opens, you guys can see that New York session open. And what did they do? They dropped price straight down into where London session bought from, okay? So again, retail traders, what can you see above these highs? And it just so happens to be that each and every single one of these highs takes place during the what? The manipulation windows. If I clone each of these manipulation windows on, you can see that this is exactly where the retail trendline liquidity starts in every single session. It's kind of hilarious. I'm not even gonna lie. If you don't understand this strategy and you're kind of confused on how I got all this information, again, that's for the CYPRX students. But so we can see here another confluence surrounding this intraday scalp was that we were creating that triple touch trend line methodology where we like to trade against that. You can see a touch of the trend line here. Retail traders were most likely selling from these highs as well. And then retail traders were most likely selling from these highs as well. Well, as CYPRX traders, we already have well-defined areas of interest where we're not going to be looking to sell unless these lows are broken, where we saw banking institutions during the previous sessions take buy positions from. So as CYPRX traders, we're being patient, we're sitting on our hands, we're waiting for discount, okay? Now I'm going to take your attention down to the 1-minute time frame and show you how I got this more well-defined A to B move during London session, where I took my Fibonacci from the low. Again, your Fibonacci tool is a tool to measure institutionalized discount, where discount's most likely going to be based off of a previous area of interest that the bank and institutions bought from the previous sessions. Okay, so we'll go down to now the 1-minute chart. How did I get this well-defined A to B move? Okay, I've mentioned to you guys for quite some time that we're looking for the higher low that gets created after the sweep of liquidity. Well, if you look at this area on the 1-minute chart, we can see right here. Okay, let me zoom in for you guys so you can see that. We see a low right here. Okay, this low right here was swept by these 1, 2, 3 bearish candlesticks. Right after that, what is created? 2 bullish candlesticks, a higher low. So this is the higher low after the sweep of liquidity. Again, here's that pattern. We see a low violated, and then the market creates a higher low and a higher high. Obviously, of course, somewhere up to the upside. Okay, but here's that institutionalized pattern, which means that what? This was the last area of interest where the bank and institutions manipulated price. With that being said, this also falls in line with what? The London session lowest area of interest where we can seek to take buys from during New York session. So I highlighted that A, and again, to B move where market broke previous market structure. Here was that double top formation in the form of retail liquidity. So I took my Fibonacci from the higher low, the A, to B move, and I extended that over, and I said to myself, this is going to give me a well-defined risk to reward ratio. I saw that price action got past to New York session at a high, so I sat on my hands and I waited, and I put up a nice, decent risk to reward. I like to aim for a 1 to 3. I was looking to buy at 79% discount from where banking institutions bought from the previous day. The market dropped price straight into 79% discount as soon as New York session opened. This was a well-defined RR ratio, okay? So with that being said, again, remember at the beginning of the Zoom call, I said that as traders, our goal is not to be correct every single time. It is to minimize our exposure to the market, to protect our capital. In order to do that, you have to take trades that are going to give you a higher probability setup, right? We'll look at all the confluences that we have so far. We have bullish order flow based off the 5-minute chart. Again, this isn't even going into the higher time frame. I well defined all of that bullish order flow to you guys, where we saw the previous day banking institutions were taking buys. We also saw how during today's trading day, banking institutions were manipulating price to the downside and taking buys. We have well defined areas of interest, 1, 2, and 3 that have not been broken bearish yet. So we have to understand that at any given point in time, the banking institutions during New York push into these areas. We are going to seek to take buy positions, moving in tandem with the banking institutions. We also have retail liquidity above highs, which gives us a better probability or a higher probability for a trade to go in our favor, because we know that banking institutions are manipulating these highs to build liquidity in the form of retail money from over-leveraged traders who are taking sells or short positions from highs above the triple touch of a trend line. You can see again that the New York session, just like the previous day, was where we created that third touch of a trend line. We have one touch here, one touch here, one touch here, and then boom, the banking institutions came to liquidate that. So I was looking for that reoccurring theme to happen. We pushed price down into discount. I pulled the trigger. I executed a market executional trade right here at roughly at around 33.5 cents. And boom, we pushed price back. We pushed price back to the upside to come and clear out all of that trend line liquidity above highs. You can see over to the left-hand side that the New York session, right before they pulled profit on this trade, they tapped right above the third touch of a trend line during Asia session. So all of the CYPRX confluences align, again, trading against retail methodologies, trading with the bank and institutionalized order flow, being able to identify on the lower time frame what the banks are doing, manipulating price into discount and then taking buys. We saw that Asia session did what? They liquidated lows, and made runs on highs. Same thing with London session. They pushed price down at the discount, taking buys from Asia session, and then took buys. I identified that New York session got past price at a high, and that they pushed price down into discount from where London session took buys from. This gave me a well-defined risk to reward ratio, which again is our goal here as traders. It is not to be right every single time. So with that being said, this allowed me to build the confidence to place a nice little 1 to 3 risk to reward ratio on XRP. I'm in and out of the market. I like to intraday trade XRP. Yeah, any questions surrounding this trade? You guys can go ahead and unmute your mics if you guys have any questions. Very easy, in and out of the market, pulling profit. I still have like 0.5 lots running on this trade. My stops are moved to break even, which has protected my capital. And I'm hopefully looking for this to come and make a run on the liquidity from yesterday's New York Okay, guys and gals, I hope that you all enjoyed that video breakdown. I'm going to cut the Zoom call short right there because it goes on for another like 30 to 45 minutes where I just let the Twitter followers and the YouTubers and the CYPRX students ask general questions. I hope that you guys enjoyed that video breakdown. If you did, smash that thumbs up button again. Subscribe to the YouTube channel. We do appreciate the love and the support. And as always, be cognizant, be aware, and I will see you guys in the next YouTube video breakdown. Everybody have a good week.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh.